Hello, everyone. It's Wednesday, May 27th, 2026. Good evening from the beautiful Midwestern Illinois. It is a stunning day out here. The weather is absolutely perfect. I'm off to a little bit of a late start. I usually like to catch the market during the day, but I had a few things to take care of, and I finally got around to making a video just a few minutes ago. So let's check in with the headline of the day. Everything's fine. AI's got it all under control. US bombs Iran for peace. The missiles are flying. The negotiations have never been closer. Well, we're almost at a deal, but yet the escalation in the Persian Gulf continues. The market once again touched another record all-time high in NASDAQ. We're going to get to that in a minute. We're not worried about deficits. We are not worried about jobs. AI is going to solve that. We're not worried about the energy crisis. That's also going to be solved by AI, but maybe the AI will figure out how to 3D print gasoline, and then, everything will go back to normal in Europe. They're going to run out of jet fuel in a couple of weeks. Don't worry about that either. Bureau of Truth says nothing to see here, move along. That seems to be the mantra, the catch-all phrase for everything that's going on. Everything's fine. Just keep going. There's nothing to see here. Never mind those grocery prices, and never mind that record U.S. debt. I mean, this is a little bit of an exaggeration here, 41.7 trillion, but just give it another couple of months. It's already pushing about 40 trillion right now. So this is what's going on. I've been Mr. Doom and Gloom lately, and I decided to switch my attitude just for today and look on the bright side of things. So here we are. Let's check out the rest of the news headlines. We could see that from the Zero Hedge feed that things are pretty much the same. It's Groundhog Day in here every day. So we have more hardline attitudes from Washington, no sanctions relief unless Iran gives up uranium. They've been talking about this for weeks. They need to, stop their nuclear program and hand over their enriched uranium. Iran says, no, we're not going to do that basically every time. It says here that the U.S. rejects fabricated peace framework by Iranian side. Well, what's fabricated by the other side? We're supposedly closer to a deal than ever, and then all of a sudden we read the headline that US and Israel strike more targets than ever before. So this just makes absolutely no sense whatsoever. Goldman hikes S&P target to 8,000, shrugs off speculative mania. There's no bubble, there's no mania. This is completely normal, right? The market's up, 35% in 2 months. Well, we'll get to the chart in a second here. The NASDAQ went from 23,000 at the end of March going into April to 30,400, I think is the high today. We'll check the exact prices in a minute. UBS answers the 10 tough client questions, part one. What are the 10 toughest client questions? There should be only one question. Are we going to keep going higher, or is this thing going to correct? That's it. It's really simple. The market's going to go up or the market's going to go down, right? Well, what are these, 10 questions, these 10 toughest questions? I'm already in, I'm buying the high tick. Is this a good idea? U.S. India signed critical minerals and rare earths mining pact. Well, we're going to have to get those rare earths from somewhere because our relationship with China is deteriorating rapidly because we're impacting their oil supply bigly, as they would put it, right? 70% of China's oil comes out of Iran. They're already doing reroutes, and they've got this, train line set up already, to try and compensate for the fact that the strait is basically closed. There is some traffic moving through there. They did let a group of ships through there recently, but all the ships paid a toll. It's definitely not even close to open. And if it does reopen, it's going to reopen under conditions probably that we're not going to be in control of. There's a dramatic shift in the way that this thing is going to function now in the future. Seattle residents forced to barricade their streets to protect from gun violence. Well, the social situation continues to deteriorate, but pay no attention to that because the stock market's on another record high. U.S. stocks were flat while oil dropped on continued Middle East peace hopes. Right, peace hopes in the forms of more military escalation, right? More fake headlines, more military escalation. Oil goes down on these types of headlines. It makes perfect sense. Mexico hosts Iranian World Cup team after training camp switched from U.S. It looks like they had to do a little bit of a logistics refactor right there due to the situation. The melt up still owns the trend, but the upside reflex is fading. Well, we're in nosebleed, uncharted territory. This is insane. It's a mania. It's a hyperinflationary parabolic blast off is what it is right now. And will it sustain? Will it keep going? It just might. It it just might. There seems to be a blank check for big tech to build as many data centers as we can muster, and we're compensating for the build out by printing cash out of thin air. So the money doesn't really have to come from actual investing anymore. We can just print it and give it directly to the appropriate parties in charge of the AI revolution. China's crackdown on online foreign trades will increase capital flight. It looks like that China wants to prevent people from selling short the market. They're banning short selling. They've done this before, by the way. This is another effort by the powers that be to keep markets propped up. We have court hands Democrats an ugly loss in Florida, redistricting fight. This political thing is definitely going to become more of a headline, shall we say, driver because of the midterms that are coming up. And some people are not happy with the current party that's in there right now, so they want to change that. Why is consumer sentiment at record lows? Well, it doesn't matter what the data is because everything is awesome and AI is going to solve everything. So this is just more of the same rhetoric. It just seems to be Groundhog Day. It just goes on and on and on. It's the same thing every single day. The stock market's on an all-time high. We're close to a peace deal, and the military escalation continues. This article was interesting. The quiet collapse under the market's surface. It's getting louder. Let's get a little bit deeper into this one. The market is hypnotized by headlines out of the Middle East. Every missile strike, every oil spike, every rumor about escalation with Iran sends volatility dealers and gamma chasing algorithms into another violent intraday swing. We've seen this violent price action repeatedly for weeks. But beneath the geopolitical theater, a dangerous story continues to deteriorate quietly in the background. Multiple areas are cracking in a way that looks increasingly systemic. And almost nobody wants to talk about it, but I won't shut up about it. This is Quote the Ravens Fringe Finance, if you're interested. You can find this on Zero Hedge and read about it. Why? Try this on for size. According to Fitch Ratings, the U.S. private credit default rate just hit another all-time high. Huh. Probably nothing. Nothing to see here. Move along. Fitch reported that the trailing 12-month private credit default rate rose to 6% for April 2026, up from 5.7 in March and the highest level since the firm began tracking the data in August 2024. We know that cracks are appearing in the private credit market. These cracks are widening now. So private credit is basically how much collateral a lot of the players have, right? And there's a credit crunch due to that BlackRock redemption thing that happened a few months ago where they were halting redemptions. There were a couple of venture companies that went under, and then BlackRock was affected by this and some other, very, very big firms, and they started halting redemptions because they didn't want a full run on the system. Because if everybody tries to redeem at once, then they have to sell assets in order to meet the redemptions, and then that's going to cause the market to really start to tank here. And that's obviously, we can't have that. So we have, we'll perform whatever maneuvers necessary to prevent that from happening. The model-based default rate climbed to a record 4.8%. So that's 4.8% are in default, while the privately monitored rating default rate remained at an astonishing 9.7%. Those are accelerating cracks. Fitch recorded 10 private credit default events in April alone, heavily concentrated in industrials, manufacturing, and business services. Credit default events are things like the 2008 crisis, where the holding companies are forced to sell or liquidate assets to meet debt obligations. Credit problems, credit crunch. They don't have enough credit available to cover the servicement of the debt, and they are forced to sell assets. So this is a very big deal. I had ChatGPT summarize the article so we don't have to read the whole rest of it in its entirety. I said, what's the theme of this article? And it says the core theme of the quiet collapse is getting louder is that the market is celebrating the AI melt up and geopolitical headline relief, which is based on the US bombing Iran for peace, while deeper structural cracks are quietly worsening underneath the surface. The article's main argument is that the surface level market looks strong. AI stocks still dominate. Indexes remain at their all-time highs. Volatility appears contained. Investors keep buying dips. But underneath that, credit stress is rising. Private credit defaults are accelerating. Leverage and positioning are extreme. I believe the leverage and margin debt is the highest it's ever been, ever. Institutions are quietly hedging. There's some, entities out there that are, they're hedging, that they know what's coming. Liquidity conditions are deteriorating. Rates volatility remains elevated. Macro geopolitical stress keeps building. Well, the strait remains closed. The energy deficit continues. We're going to look at the energy numbers here in a second. A few major sub-themes running through it. AI melt-up versus structural fragility. The article argues that the AI rally has become reflexive and crowded. Well, yeah, everybody's in here. Everybody has been buying the high tick for weeks now. There hasn't been any correction yet at all. There's been a few hiccups here and there. We got a 400 handle hiccup in NASDAQ. We'll look at that in a second, but there's been no real correction. Semiconductors became the trade. Everyone feels underinvested. FOMO, upside chasing is extreme. Nobody wants downside protection anymore, but momentum underneath is starting to wobble. It could keep going forever, but is it going to? That's the question. Credit markets are quietly breaking, one of the biggest warnings. Private credit default rates are hitting record highs. The Fitch study outlines systemic stress is quietly expanding. Credit markets are whispering distress signals. I would call that, 5 to 10% metrics in the report that Fitch provided about the private credit. I don't think those are whispering distress signals. Those are major warning signals. The article frames this as markets focusing on headlines while ignoring deterioration of the financial plumbing underneath. I've been saying all along that the market is ignoring the energy crisis. It's pricing in a mild interruption. It's not pricing in an actual shortage. Volatility is artificially suppressed. Volatility looks calm under the surface, but positioning is dangerously one-sided. All it takes is one catalyst. If the markets crack lower, forced selling could accelerate quickly. Everything's fine until it's not. And then it's a major problem. And in today's algorithmically driven trading environment, things happen really fast. Well, once the threshold gets pushed over the edge, all these things wake up and start doing something. The phrase upside panic, nobody wants protection, captures the idea that markets are aggressively chasing upside while underpricing downside risk. Geopolitical and energy stress never actually went away. The article ties Iran tensions, Hormuz instability, rising oil stress, inflation pressure, Taiwan risk, rates volatility into one broader idea. The market keeps pretending that these are temporary headline problems while structural instability keeps compounding underneath. The main contradiction. The entire piece revolves around this contradiction. Markets are near all-time highs. AI speculation is euphoric. Risk appetite looks extreme. While simultaneously, defaults rise. Yields stay elevated. The bond yields are going up. Oil markets remain unstable. Geopolitical risks increase. and liquidity conditions weaken. So the quiet collapse is not an immediate crash, but a gradual deterioration beneath the surface of the rally. Let's check the reality of the energy situation. I have changed the title here. So we've got a new title. I told you I was Mr. Doom and Gloom. We're trying to give a more positive spin on things. So here we go. It's the energy doomsday clock. The strait has been closed for 89 days, 17 minutes, and 4 seconds. We're losing 1.22 billion barrels of crude oil since the closure. We're losing about 8,000 barrels this minute. We've already lost 100,000 barrels in the first couple of minutes of this hour. We're losing 14 million roughly a day, 97 million roughly a week. The daily demand is 104. The crude oil price is not high enough to influence demand destruction. So the world is still consuming crude oil at the regular rate. It's not even aware that there's a problem. It still continues to consume crude at its normal rate. We have 91 million some odd effective supply, so 13.3% of the supply is being destroyed every day. And this is now 2.73 times the largest oil crisis in history. So once again, here are the facts. This is the reality that nobody wants to acknowledge. This is the very real alarming part about all this. And what these new countdown metrics are is this is the Cushing operational minimum. There is a minimum amount of crude oil that needs to be inside the Cushing facility in Oklahoma for it to function. That's 20 million barrels. Well, it's currently sitting at about 20.1 million out of its 76 million capacity. The operational minimum is 20. So once it goes below 20, there's no longer enough pressure in the facility for the crude oil to travel through the plumbing. So it needs 20 million barrels of crude in there in order for the crude to flow. So we're about 4 days from running out of working available inventory above the minimum. They're going to need to do something about this immediately. It's going to have to come from the reserve or some other commercial stocks or some tankers that are, still floating out on the surface. This has to be rectified in 4 days or the Cushing facility is going to stop working. This is going to be real interesting. So we got 4 days until that. We have plenty of time to try and sort this out at the commercial level and at the SPR level, but obviously this cannot keep going indefinitely. There is a time limit on this situation. In this particular phase of where we're at in this situation, there is a time limit. We do not have unlimited time to figure this out. Let's check in with the futures. Let's see what those futures did today. NASDAQ hit another record high near 30,400. It has come off. It's about 400 handles lower. The S&P hit the all-time high by a few ticks. So we got another higher high in there by a few ticks. Current price is 75.38. We have the gasoline is coming off pretty substantially from the high. So about 310. Once again, the market is pricing in a favorable outcome over the next couple of weeks. I do not know how that's possible given the pattern that's in place, but maybe the market knows something that we don't know. The crude oil trading at $90. It's been in the trading range. Up at 115, down to 75, up to 105, down to 85, up to 105. You can see that the period is getting smaller. The sine wave's amplitude is shrinking. So it's consolidating in here. The waves are getting smaller. It's consolidating between 90 and 100. So is the market going to resolve? Everything's going to go back to normal. Crude's going to go back to normal prices. Everything's going to be fine again. Or are we actually going to start seeing the effects of an actual supply shortage take hold here? it's going to be really interesting. I really hope that they sort it out, but it doesn't look like they're going to be able to sort it out anytime soon. These next couple of weeks here are going to be really critical. So I will be studying this market pretty deeply and pretty aggressively here. I want to see what's going on. The numbers right now don't add up. This equation, this whole equation, this does not add up. Something is off here. Either the market knows something that nobody knows, or it's just completely oblivious in total denial, and we're going to see the price reflect that when it finally wakes up to the cold hard reality that we cannot print more oil or gasoline. That is all I've got for you guys right now. I'm looking forward to tomorrow to see what happens here tomorrow in the market. I will be up early, hopefully. I got a little bit of a late start today, so I definitely want to make sure that I get in here early tomorrow. I didn't really miss much. You know, the market hit an all-time high and then came off. The crude oil market really didn't do much of anything. It's been kind of a nothing burger all day. We'll see what happens here on Thursday. Thursday is usually some guaranteed volatility. We are going to get the crude oil inventory reports tomorrow, so I'll be able to update the energy doomsday clock now, and that's going to be at 9:30 Central Time. So maybe I'll jump on here at about 10:30 Central Time with the new energy metrics, and we'll go through the numbers and we'll see what's happening. So until then, you guys take care. We'll see you tomorrow. Bye.